Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis, which we'll get into in a moment. Just to let you know, coming up from me this week, tomorrow's webinar will be how to trade the head and shoulder pattern, 7 p.m. City time. And then on Thursday, more analysis. If you want to join me on those webinars, just register your interest at the webinar page. Right, everybody, if you read through the disclaimer, any questions to the chat box or the Q&A box. If you're on our YouTube live stream, I cannot see your chat, but you can join us in the webinar. I've given you the link there. So if everybody could just take the time to read through the disclaimer. All right, let's move along now. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I'm a full-time trader. I've been trading the Forex market now for more than 15 years, almost 20. Mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. If you want to connect with us through the week, just head over to our website, acy.com, go to the Market News tab or our YouTube channel at ACY Securities Australia. And if you want to connect with me personally and get my links at my Linktree page, just to note the name and some free resources there. Now, if you want to get access to the chart layouts and templates I'm using for MT4, then contact Nathan Bray's emails there at the bottom. And for those in the webinar, I will give you Nathan's details. And why good evening to you. All right, so that's Nathan's details in the chat. If you want to get access to my chart layouts and templates for MT4. All right, so let's get into news items coming out for the week, first of all. So I'm at forexfactory.com, time shown on my time, Queensland time. So this evening at 10:30, so any Canadian crosses, it's going to be highly volatile for those. We have the CPI data month on month and year on year. So it's inflation data. So expecting maybe a slight movement down on those figures. Of course, we had an interest rate cut a week or two ago. So if this keeps moving down in the same vein, then we may get another interest rate cut from Canada moving forward. So it's going to be volatile for those pairs. Midnight into Wednesday for the US, we've got CB consumer confidence. And into tomorrow morning, 11:30, and for Aussie, we've got CPI year on year. So that's going to be highly volatile for Aussie crosses. Expecting that to tick up to 3.8. The market has been a little bit buoyant on the Aussie crosses at the moment. Then moving into Thursday on midnight, US new home sales. Into the evening on Thursday, 7:30 for the UK BOE Governor Bay speaks. 10:30 p.m. for US final GDP QQ. Unemployment claims. Into Friday midnight, pending home sales. And then the market will definitely be looking at this on Friday, 10:30 p.m. US core PC price index, that's an inflationary figure. And of course, Canada's GDP month to month. So I think the market's heading, they want to know what this figure is for the US on Friday. But of course, there are other data release points coming out as well through the week. So make sure you know what's coming out at least 24 hours ahead. Okay, so of course, the Canadian data here is going to be very impactful for the Canadian crosses tonight. All right, let's get to the charts now. After having a very positive close on the week, last week, we have been selling off. This is the dollar index. So last week, we finished right up to this weekly resistance level. We're dipping down within the range of last week at the moment. And that is on the day chart here. It's between this range, low and high. We've had about a 79% pullback. Well, I've lied a bit there. Just past the 62 at the moment. So maybe we're just having a 62% retracement, really, of last week's range to then get support to move up. So trend is up until we can break below 105.13. So if we break 105.13 today, or sorry, not today, but this week, could happen today, depending on what the market does. But if we break 105.13, then that's last week's low, and that would mean then potentially we might be getting a reversal. So as long as we don't, and we start to maybe put an intra-week low point in here, we could be heading back up to retest 105.87. So even though we sold off Monday, don't know where Tuesday is going to finish yet. It's only one day down within the range of last week. Doesn't mean to say we're going to be finishing down for the week. We just started negative for the week. Azu, hello to you. Okay, so S&P 500 just pulling back today's support at the moment. So a little bit away from the all-time high. Day support there at 54.49.76. It would be a good intraday level to watch. If it retests and holds that during the day, you can see the stock market's not open yet. So this is just really the futures trading. Does 54.49 hold intraday today? Can you see that hold to trade back up? It is as well. That's last week's low to high. We're in between the 62.79% zone here of last week's range. Are we holding here to move up? Okay, so can you say maybe an intraday setup that you trade to trade up from that area? All right. Now, euro dollar, let's go to the day chart. We're coming back up the range. It's a little bit mixed in here because we have a higher bottom, lower top. This fib is drawn across last week's range. We've been up to the 79% level, so we could just stay range bound here, waiting on data. It's a little bit above, back above this broken level of support here. Not sure whether that level is really telling me anything too much, other than I just want to know where it is. So trend has most clearly been down, but we're just shifting into mixed. We take out the high here, we're back to up. So we're a little bit uncertain at the moment. For our chart, this is a range of last week. Now, as I move into the 4-hour chart, things look a little bit nicer in that, you know, let me use my other tool. In some form or fashion, that could be a left shoulder, head, right shoulder. I know textbook people say that's not, but in any event, this outward price action up through here and up through here is struggling at that level. And where do we come back to? Like yesterday, back to this level and held. And it's at the 79% level of last week's move. And we came up to fill this imbalance here. So very logically, this should be resistance if we're going to hold. And we held there yesterday and we've held there today at the start of London. So are we going to be topping out here to move back down this way? So you just need to be aware of 107.23. I said, you know, I'm going to keep it on my charts, this day chart low over here, because you can see the last 4-hour candle bounced off it. So I don't want to be trading too close to that level if I want to get short. So just aligning with the move down of last week. Is this a rally and are we moving down? Could be looking at this small range that's happened today. And yeah, there's a pivot up here, the 79% level of that range. That's assuming price can get up to there. Yeah. Do we come up to put in a little lower top here, a lower area to the start of London's high here? We couldn't quite take out yesterday's high. So are we going to come up to that level, 107.38? That would be a good level to watch during the day. Might not get up there, but it's a good level to watch. All right, just be careful. If you want to get shorts lower down, don't be getting short too close to 107.23 because you can see here we bounced off it and the central pivot point today. You know, yesterday, once we moved above, it became support here. So it might be worthwhile if you want to be sure that we are moving back to the downside, waiting to see a break back below that level to then become resistance. So it does the opposite of what it did yesterday. And then you look in this area for an opportunity to get short. All right, so it all depends how aggressive you want to be. I mean, you could be jumping in now. If you want a real tight stop, you could be jumping in now. Stop just goes above here. Price gets down to this level at 107.23, get the risk out, and then you're waiting to see if price can break. Or you hold on your hands and you wait to see if price can come up to this level. Stop above this high or this high over here. All right, Euro yen. Now, Euro yen's very high. It's actually above its monthly major level at the moment, this major monthly level here. For the last 3 weeks, it's been pretty much holding at that 169.95 level, but we're above it. Next major level is at 174.74 over here. So we're a long way away from there at the moment. Good 300 pips. Now, trends are all up. Weekly's up, higher bottom, higher top, but we did have a lower top. And now we're coming up to test this highest top. We could see a false break at that level. It has been rather mixed and sideways and rangy in here. But at the start of the week, we've obviously moved up to try to come up to test 171.55. Now, you need to know that we're very high up. And if you want to follow the trend, you want to see a pullback. You don't want to be buying so high up, because the higher we're gaining up, the more chance that price will have a pullback. I'm pretty sure there was some intervention yesterday. The yen was getting very close to 160. Pretty sure we had about 100 pip pullback on a 50-minute candle yesterday. So there is a little bit of jitters going on, I think, from the bodge. We haven't had a massive, obviously, we haven't had a massive intervention like we had down here, but this high is the intervention high from back in April. So it isn't any stretch to expect that we will struggle to move above 171.55. So buying anywhere near there could be a little risky. Now, we've moved above this level, 170.88. So that's the area to watch for support. And you can see 2 4-hour candles here have hit it. One's hit it, one's been fractions short. So that would be the clear area of support to watch there at 170.88. And of course, if you moved up to 171.55, that would be clear resistance. So at the moment, just moving to the 15-minute, you can see it's come down to supports today and then been fractions short. So that is the clear area to watch at the moment down here, just below 171. So 170.88 or close to is being support. So that's the area to watch for more support if you're bullish, because quite clearly market's proving to you here that it's support. There was a big quick 100 pip decline yesterday. Will we get another decline today? So it's always a little bit dangerous so high up. You know, if we come down to that low today, that might be support 107.27. So just worth noting the key areas 170.27. That could be, if we got back down there today, we might go through it 10 or 15 pips, 20 pips. But then if we started to trade back above that level, can you see you set up to buy? Because there's be a high chance that we at least move back up to 170.88. So at the moment, buy side is probably the better side to look at if you're prepared to buy at such high levels. If we do see a clear shift below 170.88 today, then look for that to be resistance, because then we're dealing with a potential false break. All right. Okay, euro pound, nothing much changing in my analysis. This is the area I'm watching. Still a gap in here. We're slow but surely filling that gap. We're not getting there yet. So the area I'm watching is at 84.83 to 84.98. That sell zone there. Broken support to be resistance to them further move down. So it's just laboriously grinding maybe back up there. So it's just giving patience at the moment on the euro pound. Pound dollar, it's just testing 127 at the moment. So all these lows here, 1, 2, 3, we have moved down through them, but of course we're actually trading back above them at the moment. So the lowest low at 126.75 we weren't able to hold below. This is a weekly high over here at 127.09. We've been up to about 127.00. So when the US news comes out later, we may get, just want to refresh my memory. Midnight, CB consumer confidence. We certainly could see a spike up to the 79% level here of this range, last week's range. So that 127.14, and you got that weekly high here at 127.09. So that would be a very logical area to expect to rally to. This trend is down on the daily. Where are we? Down, rally, down. Okay. Until we take this high out, trend is down. So what we're dealing with here is a rally at the moment. Okay, so we have hit 127 for our candle is just negative at the moment. I mean, the most preferred option would be to see price come up to here, 127.09 to 14. Post news. 15-minute trend is up here at the moment. But I mean, if we come up and re-hit 127 and fell once more, twice, okay, then you'd have to look at 127 or close to, maybe for a reversal back down. All right. 126.75, which we've moved back above now. You can see here yesterday, studying price action, we moved above, became support once more here. All right, so you don't want to be selling anywhere close to there, but if you could get a tight, maybe trend line break up here on a further failure at 127, then you've got room to get your trade to break even. You have to come down, test this level. And if it breaks, great. If it doesn't, well, at least you've got your risk out. All right. So what's going to be happening? Does 127 start to cap that pound dollar? Okay. As I say, it could get up to 127.09 to 14 post news. But very logically, if the trend doesn't change, this is just coming up to put in another lower top on the daily chart. So what's your setup? What do you look, what is your setup to get in? This is the area I'm watching for failure. Okay. At the moment, it's looking a little like a reversal up here at the moment. Pound yen, continuing its uptrend. It's broken above this area where it was struggling last week. It's taken out last week's high here at 201.61. No major levels of resistance for quite a while. If you go to the monthly chart, there's a big open space here at the moment. So it's just clear uptrend at the moment, unless of course the bodge comes in and intervenes. We could certainly get, if I just measure this, we could certainly get another intervention like that. So let's assume that we can't make a fresh high. That would get us down to here if we've got a similar kind of intervention. And of course, that's not out there stretched imagination. So at the moment, the day trend is up. All trends are up. It is 1, 2, 3, 4 outside day. So 1, 2, 3, 4, 5, 6 positive days up at the moment. Might need a pullback. I'm going to use that low. 62 level retracement comes into these highs over there. So think here, you don't want to be trading so high up. You want to be looking for logical pullback if and when it can occur, which would be, I think that this area here would be the best area to look at. 200.74 down to 200.50. Until I could see a nice healthy correction, I think, you're just buying the top of the move, aren't you? Buyer beware at the top of the move. So I would be waiting for a correction. Don't think the 4-hour chart's really telling us anything. Still had an uptrend on all high tops and bottoms there, but I would look for a pullback into that zone. All right, cover the pound, Aussie yen. So we've got the CPI data coming out tomorrow for the Aussie pairs. So we are a little bit buoyant. We may be buoyant leading into that, and then everything's getting factored in, and then we'd sell off. But we'll have to wait and see. Aussie yen broke out last week. Broke out where it was holding. It's broken above the 2013 top here. The next one from 2007, I think it is, or 2006. 107.85 if we can get there. So we're about 150, 60 pips away at the moment. So we could definitely see that level this week, or we could see a reversal back below 105.42, or a very high up historically here. Trends are up on all time frames, up on the weekly, it's up on the daily. Quite overextended. 1, 2, 3, 4, 5, 2, 4, 5, 6. This is the seventh day if we remain positive today. So do you want to buy it at the seventh day up? Probably not. I don't. Logically, if we're going to remain bullish, the key level we've broken above is at 105.42, so that should be key support. All right, if that doesn't hold, I would maybe anticipate we could reverse back down the range, because then we're having a failure at a major high. If you get a failure at a major high, you often get a major reversal. So buyers, are they going to hold 105.42 and continue this up? Now, any pullback that got fraction short of 105.42, yesterday's kind of intervention got short of that too. All right. But if we break a low, I would at first expect maybe we're going to come down to 105.42. I'm not that keen about getting long up here. And I'm not that keen about getting short until I see a clear signal to get short. So I'm a little bit on the fence. It's too overextended at the moment. I could entertain a move back down to 105.42. In that, just allow price to move down and then see what happens here. If we do get some form of intervention, we could certainly come back into 104.93 down to 104.71 quite easily. All right. The last intervention, it's worth doing this on your charts, where that was the size of the last intervention. If it happens from this high, it gets down to 101.19. And if you're a newish trader, it's worth going to say to the 4-hour chart, going back in time on your favorite yen pair and seeing what the price action looked like. Because if we get a first massive leg like this one, which was a drop of 350 pips, then we might get a similar rally and then another 350 pip drop. Because these, if I do them in boxes, these moves down are probably very similar. A bit shorter here, but you get the idea. So by no means out of the realms of possibility that we won't see another intervention. So any small interventions, I will watch 105.42 for support at the moment. And I'm not prepared to buy so high up. I would most definitely entertain the idea, if we got up to 107.85, I would entertain the idea of a very tight entry for a reversal up there, but we're not there at the moment. All right, so at the moment, we're rather range bound. You can see we're coming up around about 106.35, and then we're moving down. Tried to move above 106.35, and we're starting to move back down again. If we don't get any intervention today, you could look at this range at the moment. Look to this area here, 106.01 to 10600, 79% fib in the figure there. Okay, we got some support spike down just below the figure today. So support's come in just under 106 at the moment. So that would be the area to try to look for a long if you're prepared to be, an intraday buyer high up. But you can see yesterday we did have a move down of about 100 pips. Got 75 pips on the Aussie yen yesterday. That was the intervention candle, which was 60 pip candle. And the intervention could come when we have the US news. You know, if the US news comes down and pushes the dollar yen a little bit higher again, then after that we might see push down. Okay, now the Aussie is range bound. It's really not changing. Failed at logical resistance last week. It actually held at logical support early in the week. Start of the week Monday, and by the end of the week, it was Monday, Tuesday, Wednesday, Thursday, came up to resistance and we came down. Now, are we coming down to rally? Might come up into here. Could come up to 66.98 tomorrow on the CPI data. Today, we may not move above 66.79, but we could come up very close and fail and move back down. So, all depends if you want to wait for the Aussie data tomorrow, or you're prepared maybe to have a go up or close to it, 66.79. Just monitoring this range here that we sold off from, tagging resistance last week. We're just staying at the 79% level of this range at the moment. And at 2, so this little area here. So if we came back up to this area later in the day and started to hold once more, if the US news spikes up there and then it holds once more, and you get the same sort of price action here where, it trades above the 79% level. You see it trades above, price action went up, started to come down. Starts to put in a lower top, a lower bottom on the 15-minute chart. It might get the same sort of price action again. So later in the day, do we come up and then do this sort of price action? If it does, then you want to be shorting at 79 level or as close as you can to just stop above the intraday high point. All right. New Zealand yen's at major high. So last week I was discussing waiting for a dip on the New Zealand dollar. Sorry, New Zealand. This is the New Zealand yen. Okay. Pull back to 62. It's at the 127 extension. I was saying I would have to wait for the next pullback to occur. Now we haven't had that yet, and we are right at major monthly high point. So this high point is the one that the Aussie yen hasn't quite got to. This is the one that the Aussie yen has just moved above on its chart, and we haven't got to this one on the Aussie yen, whereas the New Zealand yen is right on it. Now, we've just traded a couple of bits above it. That is the highest point on my chart. Whether or not that is actually the highest price we've ever been on the New Zealand yen, I don't know, because this only goes back to 89. I don't know what transpired prior to then if you worked out what the New Zealand yen cross price was, but we are exceptionally high priced, okay? Usually when we're exceptionally high priced, we will falter. All right, so all trends are up. Testing that high point. I think just taking into account that the trend is holding here at the moment, you want to wait for a pullback to the 62.79% area. Let's move to the 4-hour chart, which is 96.78 to 96.47. We can have a pullback. What happens here? This looks like it's tagging 97.75 at the moment to fail. So if you're prepared to go short here against the overall uptrends on the yen pairs at the moment, now this looks like it may have come down. Is it going to do this? I mean, if you want to wait, if it breaks this low here, the trend on the 4-hour chart's changing, and it's at least maybe going to come down to this zone then. So, are you prepared to short up here at the major high? Or do you want to see a much clearer trigger? Just waiting really, whilst I'm saying the day trend is up, of course we could be dealing with a double top of magnitude. So there is the question that, well, if this puts in a reversal candle up here, do I want to trade the reversal in anticipation of a major reversal? So there is always that, or you could be a lot more. If we're going to be dealing with a major reversal at the all-time high that I've got on my chart, there'll be ample time for price action to prove that we're starting to see a reversal. I don't have to be getting in within the first 100 pips. I could wait on the day chart for price to break the higher bottom, to put in a lower bottom, wait for a rally to come up on the day chart, and look in this area then, as and when that happens, to then engage to the downside. So I've got plenty of time to get set to the short side if we are going to get reversal, because price action on structurally here has not changed yet. So there'll be plenty of time if we're going to be dealing with a major reversal. Of course, if you give yourself a bit more time to wait for a reversal, if that means then that you're not dealing with intraday price action reversal, and then if price blows above the top, you don't get caught wrong. So I guess it depends how much you want to see for proof of a reversal. This has been rather strong moving through here. We've had consolidation above broken resistance for support here, and now we've got a clear price uptrend. So you need to make your own decision as to whether you want to get, you could trade a real tight entry up here if you really wanted to. You could be waiting on the 15-minute chart. You can just wait to see if this can come back up to 97.75 and short it with a 20 pip stop. And you're just risking 20 pips for the potential for a large downside move with a 20 pip risk. All right, so what do you need to see for a reversal at 97.75? Our New Zealand dollar is very sideways at the moment. This is the area I said to watch for, the 79% level up to these 4-hour highs was the area to, when we were here, I said, watch this zone, and we came up last week, came back up again on Friday, I think it was. Friday or yesterday, what day was that? 24th, so it would have been yesterday, came back up to 79% level. Also came up to the 79% level of this range as well. In there, 279% levels there. So that is a statement that, if we are reversing, the day chart has this double top here at this double top here. So on a weekly chart, this is a double top, and in each top area, there is a double top formed potentially. Well, there is one here and potentially one here. At the moment, it doesn't want to move below weekly support at 60.82. 60.82 here. Actually 60.98. 60.98 down to 60.82, there's clear support. So if you're very bullish New Zealand dollar, this is where you want to be looking for supports to get yourself long. And if you're negative and you think this double top here is going to hold, holding to the weekly double top potential here for a long-term move down. At the moment, it's got no joy above 61.39 in here. So that would be the upside area to watch at the moment. Look at it, it's horrible here, man. It's barely doing any range, 13 pips at the moment. So up here, 61, 31. That's the area to watch if you want to get short, in line with the double tops. Dollar Canadian. Of course, we've got the CPI data coming out later in the evening, so trading this at the moment is a little difficult. It's getting a bit mixed. Higher bottom, lower top on the weekly. To the daily, struggling at all these highs okay, up here. Clear support at the moment at 136.13. And what we are doing is reversing back down within last month's trading range, which is here. So I would watch 136.31, 79% level down to 136.13. 79% fib retracement of last month's range support here. That's a weekly broken resistance level, becomes support down at 136.13. That should be clear support if you move back down there. If you saw a reversal down there, then we could move all the way back up from this area, all the way back up to 137.84.91 up here. Okay. Okay, dollar franc, we are on a weekly downtrend here. However, we had on weekly support, 88.92, a clear reversal. I would anticipate that we may well move back up to at least this area, 89.91. Right, having a day down, but we could be having a day up in the same day, which kind of puts in a minor higher bottom here. So doesn't want to come. Once we had the interest rate cut and we moved back above here last week, we're not wanting to get back down to support. Well, broken that was broken support to be resistance, but then we moved back above, so now it's support. We don't want to get down to 88.92, which makes life a little bit difficult. But I would be watching 88. So I will be watching 8,900, which is about there, to 88.92 for support. If we got pushed down into that area, would that hold as support? In fact, it could go deeper, but looking at this area here too, I would watch that area there. If you move down into that area on any kind of news volatility, does it hold to continue its move up from last week? Since it's moved above that area of resistance, any dips have not been able to get back down to the 88.92 level. None of those candles have gotten down there. So that would be the clear support on any kind of news volatility there. That's assuming we can dip down. Okay, now dollar yen is the intervention high, which is a fraction short of squashing my monthly chart in the 1988 high here. Now the Bank of Japan is going to clearly know that price point. That's why they came in and intervened just short of it last time. All right, so trend on the monthly's up, trends on the weekly's up, trend on the day is up. Intervention highs at 160.13 and that 1988 high 160.33. So quite clearly, if we got up to there and you saw any kind of reversal, and you can get a tight kind of 20 pip entry, quite clearly the risk reward favors the downside there quite clearly. Whether we actually get there, because there was a little bit of intervention yesterday, negative candle yesterday, we quite clearly could pull back to 158.25.10 or 25.1 or down to 157.70. That's support at the moment, and there's resistance, and trend is up. So personally, I'm not keen to be a buyer anywhere in this area. So high up. We had a massive intervention last time in this area. So statistically, it just doesn't, the risk doesn't legislate for me. It's just too risky to be a buyer in this area. I'm not seeing anything to do from a short side perspective at the moment. If If I started to see structure change to the downside, like I said, if whatever is your favorite yen pair, look at the structure. What happened last time? We had the first drop, then a rally. I think that was a 62% rally. So I'm quite happy just to be patient and see if we get the first intervention. Then we had a 62% rally, and then we moved, a good movement down once more to 120, beyond the 127. So allow it to get its first intervention if that's what's going to happen. Let it rally and anticipate the same price action is going to happen. Now, I don't know if that's going to happen, but it happened last time. So why would I entertain buying anywhere near this area up here? All right, so at the moment, very flat and quiet here at the moment on the dollar yen on the 50-minute chart. So 4-hour chart is just, it is higher bottoms still, higher top. So at the moment, I will just be watching for price to come up to 160.13. May even just get a 160. So anywhere above 160, then it's what happens. And you might be just prepared to wait for a 15-minute reversal then. If we go back to when were we? I was watching this reversal at the time. I'm just going to scroll back to it on the 15-minute chart. Now you could be doing this yourself, but may as well have a look, see what kind of price action stood out at the time. Hang on a minute. What was it? 29th of April. All right. Now what it did do, it had a volatility spike up. So we might get the same sort of thing happen this time. We may get a volatility, move up. And then what we got was a swing point break here. Just a change of trend, seeing a swing point break here. So then short and down she comes. All right. So, that was just a 50-minute structure break after seeing a volatile, a big volatile movement up. That candle, if you see a candle of went up 174 pips in one candle. All right, that's not a normal 50-minute candle. So then expect something to happen. So if the same sort of thing happens, because history can repeat, or some price action can repeat. All right, so be on red alert up there. Price action right now is this little gray line here, 159.47. We're right at where that little intervention happened there. So let's just put that there. 159.59. That's as high as it got after the spike. That's really where the intervention started. All right, there's the line. So even 159.59. So see how we dropped below there today? That's where the intervention started yesterday. All right. See how we came up over here and held. Then we moved above Friday. Monday, we moved back below. And we've been a bit choppy about it. But really, 159.59 could well be the headache now for the pair. And, you know, wouldn't bother me to have 2 or 3 goes and lose 20 pips a time if I had the opportunity of seeing a 500 pip decline, because the risk reward is just, you know, great. I wouldn't keep going like 10 times, but I would wait, you know, wait for a clear signal. And, you know, if I risk 20 pips, we've got another clear signal, risk another 20 pips, because we're definitely intervention time. So the potential of risk reward stacking up in your favor is very high. All right, let's just finish on gold. All right, so we're getting higher bottoms on the weekly here. Discussed that last week. The dailies moved to higher bottom, higher top. Looks like a 62% retracement here. Just looking at the 4-hour chart. So you can see we moved below 62 and then we're getting support. So there's a little head and shoulder pattern there, left shoulder, head, right shoulder. We've already missed the best level. 23.23 is the level. You know, if it could get back down into that level today, can you see your intraday setup to trade up from that level? 23.23 area there. For, you know, the day swings here at the moment, that's the movement up. There's your corrective move down. Are we going to be heading back up to the 127 extension, which overlaps with that high there? I did say last week we have an imbalance here that needed to get filled, which of course has been filled. There's another one over here above this high. So we could well be coming up into this area, which is about 2406-ish, something like that. All right. So it looks like we're reversing back up there. Can you spot a little intraday dip? Azu, you're telling me the gold is trending down on the daily? I don't think it is. High bottom, high top. So it's gone down, like so. Azu, you asking me, can we be bullish on DXY and gold? Well, at the moment, both daily charts are in an uptrend. So I guess the answer is yes. All right. I mean, the US dollar can keep moving up if it wants to. This is in an uptrend, but it's awfully range bound. So in the grand scheme of things, it's not in a this might be showing an uptrend, but it's not massive uptrend like here. You know, it's just sideways. You know, this uptrend here is stuck within this range. All right. And to some extent, the DXY is in a range as well. So they're in minor trends at the moment. We're not seeing, we don't have a major uptrend on the US dollar, and we don't have a major uptrend on gold. And if some news came out that was majorly market changing, like, you know, the data on Friday, if that comes up very high, well, DXY would probably explode north and gold would probably go down. But at the moment, you know, because here on gold, we had a lower bottom here and we moved to a higher top. So people would have thought this is going to come down for a higher bottom to move up. But then, of course, some news came out and it turned up here and then instantly turned down. And now it's turned back to up. So it's not easy because the trend keeps changing. It's not holding, you know, it's not holding an uptrend now for the next or hasn't been holding the uptrend for, you know, 30 to 60 days. It's keeps changing its mind. which isn't great for a trader, but that's what the market's offering at the moment. So that's whatever the market is offering, that's what it's offering. But this is starting to maybe form a base here to move up, unless, data changes the picture. All right. So most pairs to the US dollar by the end of last week finished down, but of course we had a very positive day yesterday. How much do we further go into positivity today, or do we get some form of reversal today? We all have to wait and see. You think it can get down to 22.70 on gold? Well, test this low? Well, it could, but it would the day chart trend would have to change, wouldn't it? All right, I'm going to leave it at that. I just want to see what the euro dollar is doing. It's not getting back up. Pound, just holding below 127. So Aussie yen's doing. All right, so most pairs are just a little bit off their highs at the moment as they wait for the US dollar to come in later in the day. Okay, if you're coming in late, we do have, the market will definitely be looking at Friday's data, the core PC price index. If that comes in positive figure, that will be most definitely US dollar positive. Okay. All right, everybody, I'm going to wrap it up there. Thanks. If you want to join me tomorrow, just head over to the webinar page, and my page needs to be refreshed. But tomorrow we're going to be going through on the education front the head and shoulder pattern. So if you want to join me, just head over to the webinar page, register your interest. I look forward to seeing you then. Okay, thanks everybody.